Welcome to Markets Now. I'm Michelle with Scott Varilek with Kooima Kooima Varilek. We're seeing some mixed trading grain and livestock futures during the early portion of this session. Cattle have been mostly strong, hogs lower, and then over in the grains were lower except for soybeans. And Scott, talk about the cattle market here. We had a nice update yesterday. We're seeing a little bit of follow through here this morning. Can we hold on to that? And how much of that is just a function of the cash trade, the news being pretty good?
Yeah, thanks for having me. It was a nice day yesterday to turn it around when all of the markets were feeling a little bit heavy, and especially in the cattle sector. And we had a little cash news to fall back on and maybe bail this market back out. It's not like we've had a wildly dropping or rallying cash market. It's been fairly steady and flat, and those bids were renewed. It started with some southern bids at 182. We thought, hey, the sky's not falling. They're bidding, and shortly after moved to 183. So, and we had some 185 Western Nebraska, some 184 by regionals in the north. So there was a lot of bids around, and some packers wanting to pull cattle ahead that they had bought for 3 weeks out. So that continued good cash news, tight supply, kind of bailed this oversold, unwinding market around to have a very nice update. It happened fairly quickly once it found where it wanted to hold, which, the December chart had a little bit of a gap measurement. So we measured from that. It was kind of down near yesterday's lows, and whoever it might be might have looked at that and said, okay, that's the correction we needed. We've still got this good cash news. We saw some buying turn the market around and in triple digit fashion.
No doubt. And we should talk about the fact that, we've had a risk off climate here. Funds have been exiting some of their positions, but overall, this market's held together pretty well with all of this noise, don't you think?
I would agree. We're still at good levels. We've had a pretty good correction here. I mean, it's been noticeable, and as much as it's moved down, but outside market news is just heavy. We've had all the negative economic news, in the last few weeks, the Dow Jones driving down, talking about the higher interest, and then you throw another war on top of it here over the weekend. It was feeling your nerves were high. Okay, I've got a lot of risk at some of these levels, so you were getting a little bit worried about that. But the way that we are able to fight that off on a Wednesday already, just a couple days after the weekend, and turn it around gives everybody a little bit of confidence again. Every day we can get behind some of that outside negative news, the better we can do until something else gets thrown at it. But that's still the biggest risk, I think, to the cattle market is what's going on with these outside markets, with the rest of the world, with the wars and all that news. So it's not like it's an internal issue that we're worried about right now. So if we can put some of that to rest, these cattle can turn around. Now, we've seen the fund liquidation of the longs here in the last several weeks drop that open interest severely. And I think with that rally yesterday, I was really hoping that we'd have a boost in the open interest, and it actually decreased a little bit. So I'm not, in love with that. That does bother me a little bit. I still think we have some room for some recovery here. We've got the strong cash to stand on, and this is the time of year we can actually move that market a little bit higher. So feeling okay about that. But when we do have that low open interest number, we do get a little bit of a squirrelier kind of trade in some of these markets. So when it does recover, does it in a little bit of an extreme fashion. When it does break, also does it in a little bit of extreme fashion. So we have to get used to that for the time being until we can get some fund money or some extra longs back into this market here.
Yeah, and we should just point out real quickly that, you get the demand bears that come in on those macroeconomic days you talk about, especially with the Middle East conflict. But you get choice boxes below 300, and man, that load count shoots up. That should be a good signal that demand is still there, shouldn't it?
We still feel really good about the demand and that it's been hanging on strong. And like you said, we've been able to recover those box prices. And every time they do have a little dip, they do have some recovery. We still have a consumer wanting beef, and that's been very evident. Choice select spread staying very wide. So the demand for the higher quality beef is still there. And we don't have enough of it to sell it at a discount, start really dropping those prices. So I think that the beef prices are going to have to stay high. We're not going to be able to break them too far because there won't be enough of it to go around to kind of fulfill some of those lower prices. So I do like where the demand's at, and I think it's going to stay strong here for a while.
Hogs, we have seen the funds liquidated over half of their long position last week. And is this market just seeing a continued function of too much upfront supply or what?
Yeah, I think the market feels a little heavy there in the hogs. We've got plenty of supply here. Up front, we knew coming into October that we were going to have, a fourth quarter supply that's going to be, quite a bit to chew through. We've got this strong dollar happening. So you've got, a hog market that can rely a little bit on exports and needs some of those exports with the amount of hogs that we raise here, and strong dollars not helping that out. And we also have California with their Prop 12, so you don't see the pork going into there. That's just a little bit more supply we have to go through, and China's got some of the cheapest prices, cheap hog prices there. So pork is quite marginally cheaper than what it has been. So all of that weighing on a big supply this time of year. I think that's just tough sledding for the hogs. I think these rallies are going to be short-lived, and it's going to have more pressure to the downside yet.
And over in the grains, corn seeing a little bit of lower price action this morning. Soybeans, we made new lows for the move and then kind of bounced here. But really, a lot of this is just report positioning, isn't it?
Yeah, maybe just a little jockeying around for the report today. I don't see a lot of excitement for this report. I think the grain markets are looking for new news and hoping that they can find something to boost them, but I just don't know that this report's going to do anything for it. Still hear the larger than expected yields, more than the latter. So still feel like this is going to be a report that's going to show a big corn ending stock and a decent bean crop size. So it's not going to be something we're going to stand on and make that demand any better, in my opinion. So beans have been on the nice downtrend slide, and when they try to recover ahead of a report, they can only get about 4 cents out of it, or a couple cent rally. So it's not like we have some quick short covering trying to happen in the soybean market, and corn is just content to lay pretty flat right here sideways.
Yeah, we'll see what happens after the report. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.